Okay, 111, we're trying recaps a little bit earlier now. I'm just gonna scale down, show you the one trade I did end up taking today. And I was hoping you guys would have taken it because I show this every single day. Try to teach you guys mitigation blocks. I try to make sure you understand what they are. And I know one person did take it. What time was it at? Let me just go through, because we had a whole bunch of entries off mitigation blocks. We tapped into it, tapped into it, tapped into it. And, where was it? I didn't really say when. Okay, 12 says 112 New York time. Entry was right down here. This is the mitigation block. Okay, let's mark this out. Is this the high that I took a trade off of? It was on the 1 minute. No, it was this one up here. Okay, we found it. Okay, my entry right here, straight off equilibrium. And I'm going to mark out standard deviation because I failed to do that. But here we go. Mark out our standard deviation. And I also want to go over, ask you guys what trades you took today, what was your expectations for the day, and just go over that in general. Entry all the way up here. I could have targeted up here, but I doubt I did. I'm pretty sure, where was my target at? Target was up at this side. I think this is what made up my risk reward for today. I'll scale down, figure out where my stop was. I had my entry. Oh yeah, I entered one contract down here. This was my first entry. When it started to move, I entered with a second contract, so my entry was like realistically right around here, but my first contract was up here, and I sized in, and my stop loss was... What? That has to be inaccurate. Okay, yeah, it was. My stop was 5 handles. Here we go. So, when you're taking trades like this straight off, our market maker buy model right down here. Can you guys tell me or identify this? Like, do you guys understand what this is? Would you be confident in trading off this or finding an entry to trade off of here?
Mm, Yeah, maybe.
Okay, because you can see we took out this low and we failed to take out the next low, so we're not really trending lower, but we shifted market structure with this low displacement through this high up here for value gap. I'm gonna go on the 3 minute because I know the 5 minute's a mess. So, no, it's not this one. Oh. Okay. Yeah, you couldn't really. That's a 32 minute. No wonder why. Okay. Bearish for value gap. That got inversed. We could say this is a 3 minute inverse for value gap. And this is where some people could have taken a trade off of. If we ran through this bearish for value gap, people would want to be looking for longs off a tap into it. Boom, slap it down. I'd honestly do the tap. My stop would. I want my stop to be down here at this order block, but the most I'd go is 12 handles for a stop loss. And you could target up to the 2.5. So this is good 80 handle win. We had so much volume today. It was crazy.
Yeah.
But yeah, 80 handle win. This is my win for today. I wasn't able to call anything out. A ton of people were taking shorts. And going through it now, I kind of understand it. But I wasn't looking for trades because it was directly off CPI. Things weren't looking clean enough for me. And I didn't really have my buy straight. And I was also misaligned for the day. But tapped into this. We tapped into this. Another mitigation block. Went lower. Let me actually show you guys something. I know I saw something pretty interesting today. I think it was the higher time frame turtle soup that we tapped into. Hold up. Did anyone else, what was it? Did anyone else see that? The higher time frame soup. Took out this high, which this is actually a separate high in the hourly. It's not the fair value gap, and tapped into this fair value gap. And I told you guys in the recap last night, CPI is going to be bearish. We're going to go lower for CPI. And this is our last line of defense. Do you remember me saying this? This is our last line of defense for shorts, and that's exactly what we got. Plus this market structure shift right down here, because we closed below this low. So, oh, I just want to test something out real quick. See if we're on OTE of this entire, our entire dealing range. Yes, we are. We don't really have a PD array in here other than this for value gap, but it's outside of it. But if we scale down, we probably could find one. But I want to see if we can continue lower through this and form a complete sell model. But DXY probably won't align with it, so. Let's go on the 50 minute. Yeah, we're only 5 minutes into the recording. Yeah, we have this fair value gap right here. Okay, I'm leaning a little bit more towards bias for tomorrow. But starting off the day, we opened, we went lower. Did anyone take any shorts today? Like, did anyone?
Yeah.
Okay. Where did you enter shorts at?
The first 5 minute city during Silver Bullet
Silver bullet.
at
Okay, that's good.
yeah.
This one?
Yes.
M2, did you take this one too? Yo, M2. He's gone. Okay. But yeah. So first time fair value gap we tap into, boom, we tapped it. I mean, this one would have messed some people up. We ran straight through that. I feel like this
I
one.
took that one too.
You took the silver bolt.
Yeah, but
Nice.
it was a 15-minute and a 5-minute, and it was a 1-minute entry.
Yeah. Do we tap into this mitigation block here?
Honestly, I don't
It
remember.
looks like we just tagged it to the tick, and that's about it. But I was talking about
Yeah.
how if I'm taking a trade off let's see actually. Oh yeah, you did tap into it. If you were gonna be taking a trade off a mitigation block plus for value gap, it makes it a very high probability.
Dude, that's stupid.
You just want to go off the tap. What's up, M2? Did you take the silver bullet
No,
trade?
no, yeah, I was trying to use my AirPods. I was trying to mute my AirPods, and you're like, oh, he's gone. I'm like, no, 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 no. Nah, hold up. Oh, wait, let me see. I took the long. So you see that, I don't want to say hammer candle. Okay, so if you go left, can you go left on the 5-minute?
Yeah.
Like, just go left. Just go left. Well, like for previous day silver bullet. Previous day silver
Wait,
bullet.
why are we going to the previous
Yes.
day for?
No. Like, wait, today's Thursday. It's Wednesday. Wednesday silver bullet.
Wednesday? Okay, let's go see Wednesday.
Oh yeah, that was nice.
Hold on. So there's a fair value gap that we didn't like tap into down a
Which
little
one?
bit. Right
This one?
there. Yeah, that one. Yeah, that one. I took a trade off that.
Oh, nice. Yeah,
'Cause
yeah.
we
You can
didn't-
see how we took swept this out too.
Yeah.
This is
I saw how aggressive price was moving, so I'm
Oh,
like,
yeah.
yeah, this is pretty good one.
Yeah. Do you wait, Kiss? Do you trade off like the anticipation for breakers for a breaker to form? Because we had an SMT at the lows, and a lot of people I saw were taking trades just off this fair value gap at this low, anticipating this breaker to form after we took out these two lows down here, and we had an SMT.
So you can anticipate a breaker once you have a liquidity sweep, but that
Yeah.
in itself isn't enough. You're gonna
Yeah,
have
that's
on the
unreal.
liquidity sweep leg. Yeah, on the liquidity sweep leg on a lower time frame, you're gonna have a fair value gap on the liquidity sweep leg. Typically, that fair value gap is in this scenario, it's a bullish fair value gap. I mean, a bearish fair value gap because the liquidity sweep is lower. So you can actually use today's. So
All right.
let's use go on the 1-minute and then go to the 5-minute where it taps into it. You know, you see how it taps into the 5-minute that I think it was Jason that took that trade.
Which one?
So if you guys are confused on taking like 5-minute trades because the fair value gap is too big and you're like, okay, where do I place my entry, especially on NQ? Because I mean, you don't know if it's gonna react off of an institutional order flow entry drill where it just taps into it right away and then it displaces lower, or it's gonna go to the consequent encroachment, or it's gonna redeliver the entire thing. And that's kind of like where the hard part is really. So to really determine it, you got to go on the 1-minute and look for a 1-minute liquidity sweep as it taps into the 5-minute imbalance. So instead of looking, you can use the 5-minute as your bias, and you can use the 1-minute as your entry. So go on the 1-minute, and then just go to that 5-minute where it taps into the 5-minute bearish.
Are you talking about this one?
Nah, where the other red box is.
This one?
The other red box up,
Oh,
like
this one?
at
Are you talking about this
10.
one?
No, like at 10 a.m. Like
Oh,
at
are
10
you talking
a.m.
about today, like up here?
Yeah, right there.
Yeah, so
So you see how price taps into the red box right there?
Yep.
For a bearish setup. Here, is it cool if I just share my screen?
Yeah, share your screen, you're good, bro.
Alright, bet, for
You're
sure.
gonna be on the video though, so.
Alright. Here. I'll walk you guys through it.
Yeah. Also, Kiss is another member of Paradise, but he's not really with them anymore.
Yeah.
He's deviated. Just like what I did. I don't know if you traded. Yeah, you traded supply and demand. We left for ICT basically.
It was for the better.
Yeah, we both
But here,
we both left at like the exact same times. When you left, I was like, all right, Kiss is gone, I'm out, and we were both.
Oh,
spending
for real?
ICT, yeah. So
Damn,
we
bro, it was-
probably have like the same amount of screen time. Yeah, we probably have the same amount of
Yup.
experience.
alright guys, so essentially, so you guys see, well, I'm on a 5-minute time frame right here, and you can see the executions right there. Now this in itself isn't enough for me personally. Maybe for you it is. It taps into it and you just go short right there. And I mean, yeah, you can go short there, but look at the amount of drawdown you're actually going to be incurring as you go short there.
Yeah.
Yeah.
That's 31 points of drawdown, and on one contract that's like $400. So if you're comfortable with risking $400 to $500 on a trade, that's up to you. But for me, it isn't. I like to risk max 25 points on one contract. And so 5-minute Sibi, there you go. So now let's drop down to the 1-minute. And the 1 minute's really going to tell us where price can be headed. So this is what I was talking about, where you have the liquidity sweep, right?
Yeah.
So you have the liquidity sweep right here, and then you have the breaker, which is essentially going to be the order block that's disrespected. So you can anticipate the breaker once you have the liquidity sweep, and then you have the displacement lower. But my entry, what I used for an entry, and this is the sauce right here, it's going to be on the liquidity sweep leg, so this leg higher right here.
Yep.
There's always going to be, not always, but where you want it, if you want it to be a high probability entry, you want the liquidity sweep leg to have an imbalance. Now this imbalance, obviously, as you can see now, was respected to the downside, turns into an inversion.
Yep.
And when price closes below the BISI, it confirms bearish order flow. Now I did get a question on this on like previous, if you guys trade footprint charts, like how do you know order flow is switching from, because you know in order flow you look at delta, you look at entropy, you look at all these things like the amount of orders at the bid and the ask. Well, essentially, if you really want to read a candle, you want to read how it's respecting the PD arrays. So if price is disrespecting a bullish PD array, because essentially this is a BISI, right? Price is disrespecting and displacing below a BISI, you're going to assume price is going to want to seek bearish, liquidity. So first it targeted internal range liquidity, but eventually it targeted external range liquidity. So my entry was off the inverse, a close below the inverse. So the execution was there. As soon as price closed below the inverse, retraced a little bit, I entered there. Price displaces. I was up at one point like 100 points, 106 I mean. And I could have exited there, but I have the recording.
Oh, you recorded the live trades?
I do record them, yeah. I actually have the recording. If you don't mind me showing it.
Yeah.
Do you care?
I want to start. No, I don't care. Go for it, bro. This is basically our server. You're with me on this.
Bet.
Okay. Literally, bro, I should start recording in school too. By the way, I wanted to ask you this. Did you learn this mainly from Dodgy DD? Or Dodgy?
Yeah.
Yeah,
So
this is
I
the
was...
exact stuff he taught. I remember I went through almost all of his videos. This is the exact way he taught. I remember he taught
Exactly.
this exact mode.
So I would always trade breakers, but this right here, bro, once I started implementing the inversions, it completely changed the way I looked at breakers.
Of course.
Because I used to trade breakers if it just had a liquidity sweep and it closed below the order block, which would obviously confirm a change in the state of delivery.
Yep.
But typically this would be, it wouldn't have, I would look back on previous trades and it wouldn't have the inversion. So then eventually it would retrace and go higher and I would be losing the trades, right? But once I started implementing the inversion, as you can see here, this is a live trade. So I entered there as soon as it closed.
We can't see it.
Oh, it's because
Yeah.
my bad. I gotta. Hey, but if you guys have questions, type it in chat, so I can
This
Wait, do you only
kind of
use, like-
advanced for where they're at, so it's gonna be kind of hard.
Oh, my bad. Yeah, I'm probably talking a little too fast for you guys.
A little bit. I haven't talked about IOFED yet, change of state of delivery, but I'm gonna get to that eventually.
For sure.
I know some people know. I know algorithmic spoken. A lot of people like that would appreciate it.
Yeah. Do you only use like this inverse fair value gap strat with silver bullet, or just like any?
So, are you aware of quarterly theory?
A little bit, yeah.
A little bit. So you're gonna only want to trade during. So there's obviously the macros, right? But within the macros, so if we go back here and if I turn it on, I don't think I have it on right now. Probably way over here, honestly. Yeah. So let me go to historical cycles, and if I take solely just the AM session one, so it's gonna be from 9 a.m. to 12 p.m. So it's gonna be from this dash line to this dash line. This is the AM session.
Yeah.
You can expect, and this is just a little tip for you guys, at 9:45 you're going to expect a reversal on the Judas swing higher from 9:30. And then typically, so like if the Judas is lower, I start to seek longs. If the Judas is higher, I start to seek shorts. But in this case, obviously we're having displacement through quarter... Oh shoot, wait, hold up.
You're good, bro.
My bad. We're having displacement through quarter 3, right? And as we're displacing lower, we have our model entry again, right here. So you see the breaker, you see the inverse, same exact thing. Price closed above the inverse, respects it to the upside. Boom. Obviously that wasn't the entry. I was looking for a retracement back into the bearish range. Obviously we just displacing lower. So we actually, if we take the high to the low, Are you familiar with optimal trade entry?
Yeah. Yeah.
So we actually respect optimal trade entry, which would be here.
Yeah.
And
I didn't
ICT
even.
has a yeah. So essentially, I like to look for my trades anywhere after 9:45 is what I'm trying to get at, because that's when manipulation ends, to around 11:38. So I like to narrow it down to here,
Oh, okay.
and this is like optimal for me personally, and this is just from backtesting and just screen time. This is
Yeah.
just for like optimal trading area. Anywhere after, because we do have a macro 11:50 to 12:10, but as you
Yeah.
can see, that one is it's not as high probability as your 10:50 to 11:10 and your 9:50 to 10:10 macros.
Yeah.
Yeah. So yeah, essentially for time frames, just focus from like 9:45, 9:50 to a little bit past 11:30. As for time frames, I don't really look at silver bullets. I'm not looking for a silver bullet for value gap. I'm just looking for a model within this time frame, and this is the model right here.
I mean, I just tried using silver bullet today, and because I saw it's been working pretty nicely, so I just gave it a go today, and it worked out well. So
Yeah, bro, that's fire. I mean, so when you entered off of the 5 minute, did you did you, I don't want to say blindly, but did you have like a confluence as to where to enter off of?
well, I know like sometimes like we'll just tap into it and go lower, but I was like I didn't want to risk that much money, so I was waiting till the constant coin encroachment got tapped, and then that's where I entered.
Very nice.
But
Yeah.
I didn't know about this strategy you just told me, but I'll definitely implement this.
Yeah. Before you implement it into your live trades, definitely backtest it, even
Yeah.
just through replay or FX replay. I like FX replay,
Yeah.
but just backtest it, and you'll see like this has a really high win rate. It's really nice, super clean. So yeah, essentially like there's two ways to enter off of this. So the first entry is the close below, which I took. The close below the bullish fair value gap, eventually making it an inversion.
Yeah.
And you want to be targeting the low hanging fruit. And if you don't know what the low hanging fruit is, it's the nearest low. So essentially, it would have been this one. That would have been my exit. And what I was trying to get at with this recording is you can see where I put my buy limit right there. I put it all the way down here, which it was eventually hit. It was eventually hit down here, but like you see, like this is just goes hand in hand with like greediness and like trying to hit those home run plays. Like if I would have scalped this and re-entered again up here, I would have probably gotten a better trade. But just to sum it up, let's see, let's go up here. So yeah, price just dips right there. TP hit, so I eventually made my TP this low hanging fruit right there, which is right there. So yeah, what I essentially did, just to sum just this entire thing up, use a higher time frame. So this is the 5 minute. Use a higher time frame PD array to frame your lower time frame models. And this goes hand in hand with the 5 minute. It's all fractal. Price is fractal. So you can use it for the 5 minute. You can use it for the 1 hour, the 4 hour. So like let's say price taps into a, like for example up here. What is this up here? This is a daily. Yeah. So this is a daily SIBI right here, right? So this entire rectangle here is a daily SIBI. So what I'm gonna do is, let's say I drop down to the 1 minute and I look for an entry there, and I bet you there's an entry there. Well, at first it taps in up here during London session, but let's just say I look for one up here. So same exact thing right here, and I'm sure you guys can see it now again. And if you just prime your eyes to like literally see this, you're just gonna see it without even like trying that hard. Liquidity sweep. The question after liquidity sweep is, do we have any imbalances? Yes, we do. We have 2. Now, I prefer when there's only 1. Reason being is when you have 2, you kind of have to decide, okay, do I enter short off of the first one or do I enter short off the second one? When you have 1, maybe on the 2 minute. No, we don't. And it's not a liquidity sweep either. So I would prefer to just enter short off of the second one, because if you take this leg higher, the second one is actually in discount. And reason being is taking a short below the one in discount means price is no longer going to respect discounted prices and is going to seek the next liquidity pool, which is this low hanging fruit. So the entry would be here. Stop loss would be a close above these inverses. So there it is. Obviously, it just displaces, and you would target. Your targets could either be liquidity pools or they could be standard deviations. So obviously, notice where we reverse. We actually reverse at the 2 to the 2.5 here.
Reversal zone.
Exactly. And then you can actually implement just rinse and repeat right here. And then where do we consolidate? We reverse right here, 2 to the 2.5 again. I don't have it marked out just for simplicity purposes, but if I turn on the levels, there it is. But yeah, if you guys have any questions on this model, it's definitely like a very useful one to implement into your trading because it's essentially power of 3. So in power of 3, you have obviously your accumulation, you have your manipulation, and then your distribution, right? Yeah. We want to capitalize off this leg. To capitalize off of this leg, we want to seek what's happening during the manipulation, and that's where you're going to find your inversion. Once you find your inversion, you can play off of the close above or the retracement. Yeah, so that's it for me, guys.
Thank you very much, Kiss. That's gonna be
super fire.
Yeah, thank you, bro. That was really informational, actually.
Of course.
This is gonna be on YouTube, so if you guys want to rewatch that, actually absorb the information, it'll be up there. But, bro, I need your chart colors. Oh, this hurts my eyes.
Yeah, I like warm colors because it just especially in the morning, bro, when you wake up. I'm West Coast, so I'd be waking up like at 6:15, bro, and it's like I see those white colors in my eyes and I'm just like blinded.
Why I'm so cranky. Okay, that makes sense. I used to wear blue light glasses and then they broke, so gosh.
I'm gonna put the chart color code because you can actually
color,
yeah, I'm gonna put it in general.
Alright, we're changing chart colors now.
Yes, sir.
I always had night mode on too, but yeah, thank you so much, Kiss.
Of course.
I'll link your channel in the description of this video.
Oh, appreciate it, bro.
Of course.
Mantas, I told you I took that trade on paper account, right?
Yeah, you did.
Okay.
Let's see this. But yeah, I think that's about it. We don't really have much else other than I can do a quick what I'm expecting for tomorrow. I'm bearish tomorrow. I don't know, Kiss, what are you, do you have a bias for tomorrow yet?
Honestly, bro, it depends what we do overnight.
Yeah,
I don't like to choose my bias yet because recently overnight we've been having some crazy moves.
Exactly.
So what I do is when I wake up, I instantly go to the 4 hour, and then I go to the 4 hour. Okay, do we have any PD arrays? If yes, then are we close to those PD arrays? Like for example today, if you don't mind me sharing my screen again.
Yeah, go for it.
Alright, bet. So like for example today, here let's go on the 1 hour. So market open was ballpark somewhere around here, right? So at market open, where did we bounce off of, right? So I'm gonna mark out this 4 hour right here, and let's say at market open, you were like, okay, where are we gonna go? Where could price bounce off of? And all I do is at market open, or like even before, let's say you wake up at 8:30, like you were trading CPI for some reason, which I wouldn't do. But mark two things: your closest highs and lows, and your closest PD arrays. So let's drop down to the 5 minute. And you can actually see where we bounced off of. Remember, this is the 4 hour fair value gap I marked out. At 8:30, let's say you were trading at 8:30. It actually taps into it by like literally a hair right there. And then we displace higher. So that could have been I don't know, that could have dictated your bias, I guess. So into open, you could have already had a bullish bias targeting higher. And now let's say you marked out the daily SIBI. So then once price taps into it, it also tapped into the rejection block, the 50% of the rejection block here. Let me do that. So if you guys knew that it tapped into the daily imbalance and it tapped into the 50% of the rejection block, which rejection blocks are treated as gaps, this would essentially be consequent encroachment of this gap,
I marked that
you
out
would
too,
know.
I saw that. I was gonna talk about it, but I realized no one knew where it was.
Yeah, rejection blocks are fire, especially for highs and lows. Essentially what it is, it's a high or a low that sweeps liquidity, and it has a very prominent wick.
Yeah.
For example, this is a high that sweeps liquidity here, and it has a prominent wick. So that's what a rejection block is, essentially. But like, let's say you already knew this. You had the PD array marked out, you had the rejection block marked out, either or. You expect, I'm not saying go short right away, expect a setup. And what is a setup? Okay, boom. This is where you drop down to the model setup I just told you guys about. Same thing for, but yeah, that's what I'd be doing. That's what I'd be doing, pre-market. So like right before market opens, I'll go on the 1 hour. And ICT teaches this in his 2022 mentorship. What the heck? 2022 mentorship. He says, right before market open, go on the 1 hour, go on the 15-minute, mark out your highs. And that's where price is going to draw to. Because all price does is go from external to internal or internal to external. So, right, like as of now, I like to keep my chart clean until tomorrow. Like I have literally nothing on my chart except brackets. So I have, I'll have like the day. So, like I already have this day marked out. So this is tomorrow, Friday. So any price action that occurs within these brackets are my Friday's price action. So what I like to do is I'll take previous day high. This is something I do mark out. I'll just take previous day high and previous day low. And this is like a good way of having a target for the day. If you don't know what to target, just target a previous day high or previous day low. For example, if I would have targeted yesterday's previous day high or previous day low, let me look for 6 o'clock here.
To make it easier, I would recommend hopping onto the 1 day time frame, just so you don't have to, look at, your time. I'm just making sure, it's just
W
something-
mans. W mans. Yeah, there you go. Okay, wow.
It seemed like you were
W
struggling there
mans.
for a bit. I might as well just help out,
I appreciate you, bro. Yeah, my bad. I'm not good with technology like that.
No, you're good.
But yeah, so look, previous day low was here. And obviously previous day high was taken out. So if previous day high was already taken out during overnight session, what does that leave you with?
A
That
bearish
leaves
buy.
you with exactly. So there you go. So now just wait for overnight to do its thing. Maybe overnight does something like this, takes out previous day high. Now you look for a PD array. There's a daily SIBI up here. I don't know. Maybe there's a SIBI right here. Let's just say there's a SIBI here, right? So taps into the SIBI, takes out previous day high, leaves you a bearish bias targeting previous day low. But yeah, yeah, keep it simple, guys. Don't overcomplicate things. ICT typically, just think of ICT as like the Home Depot of things, or like
Oh, yeah,
Lowe's. I don't
Home
know.
Depot.
Yeah, he provides all the tools, and like, let's say you want to build a house, right? You're not gonna go in there and buy you're not gonna go buy Home Depot. You're gonna go in there and look for what you need. Same thing with ICT. ICT is the Home Depot. You're gonna go into his videos. You're gonna go into his strategy. You're not gonna want to absorb everything. You're gonna want to handcraft your own model that fits your trading style. For example, my trading style, the inversion / breaker model, it's a bit more aggressive. You're trading off of a close above a breaker that hasn't been formed yet. So it's a bit more aggressive. Maybe you're not aggressive, so you would wait for the retracement back into the breaker or the inversion.
Can you actually show us right now, since we're talking about, sorry to interrupt you here, but can you do like a trade that you would take if there's like a setup right now, or like a pass in the day, like if there's like a setup that you would take or that you took today that you would, look for, just so because I want to get into breaker blocks, so I just want to get like, what's up with that, I was trying to kind of learn more about it.
Of course. So we'll actually go to yesterday's. So like I said, at 9:45, let me drop down to the 1 minute. So at 9:45, we expect quarter 2 to end, right? Which is the manipulation macro. So if I turn on my macros here, we have our quarterly theory. Shout out Day on Twitter, if you know what I'm talking about. So let's just play out quarter 2. Okay, so quarter 2, it looks like we open higher. So I would honestly look for a bearish setup. I would look for a liquidity sweep here. So we wait. No setup, right? So now I would wait for a liquidity sweep here. And yes, I'm missing out on this move lower, but there wasn't a model here. You see this?
Yeah.
We have a liquidity sweep. do we have a fair value gap on the liquidity sweep leg? We don't, right? So no model. And I like to follow my rules, so if there's no model, there's no trade. So now let's wait for external sweep. So price runs, okay, external sweep, another one. All right, so now we have a liquidity sweep. On this leg lower, do we have any imbalances? We have two actually. One right here, and one right here. So we have these two right here. So there's two. Let's see if on the 2 minute there's one. There is. This is beautiful right here. When you have one, it narrows it down to where you can like only focus on one. So now you would wait for a 2 minute candle close, not on the 1 minute, not on 3 minute. You wait for a 2 minute candle close the same time frame you're on, above this imbalance. So do we close above? Yes, we do. So right there, I would buy. And what I would do is you can either, there's two ways, like I told you guys, there's two ways to target this. You can go TP1 here at the first internal high, or you can use standard deviations. Now, if you have more contracts, I would recommend standard deviations. If you have one contract, I would recommend your low-hanging fruit. Standard deviations are projected all the way up here. Now, this is on the 2 minute. Let's see if on the 1 minute we get a smaller pull. Yes, we do. We have this liquidity sweep leg here. So notice where the 2 to the 2.5 aligns with. It actually aligns with TP1. So this is honestly a good TP right here. Or you could just do maybe TP4 up here, which is the, reversal of that leg. So let's say I go in two contracts here. I'm going to do two, so I could do TP1 here and TP2 here, just to show you guys. So where does price go? Price goes straight to TP1. So I would have taken profit there on one contract, even though the candle's already way down here. So I'm going to sell one. So let's just pretend we sold there. You had a limit order there. So that's already TP1. Stop loss, once price takes the first TP1, I usually do stop loss break even. I'm going to be honest. So let's see if our stop loss break even gets hit on the next contract. It's close. Didn't get hit. And price, does it run to? It does, right there.
Damn.
Right there. You would flatten full position right there. Now, price may keep running higher, but you can expect a reversal in this area. Now, this is on the 1 minute. Now, remember what the 2 minute said. The 2 minute said we still had room all the way up to here. So let's actually see if price runs up to here and we reverses. This is on the 2 minute. Let's see on the 5 minute. It's just to make things faster. There we go. Price taps into the... It actually runs up all the way up here. It runs up all the way to our reversal zone up here. Let's see if we can find another setup up here. We have a liquidity sweep. Okay. So we have one here. Do we have... Yeah, we have multiple actually. This is a little bit harder. So do we tap
I
into
say if
the
you were to
full?
go for the imbalances, and right, because this is what I do. If there's just too much volume on like the 1 minute, 2 minute, whatever the fuck it is, I usually stick either to the 3 minute because that usually blocks out the noise. But if there's still another one, there's usually a 5 minute right after that.
Okay,
And that's usually
yeah.
like the stronger settings. That'll predict the stronger move.
This one makes sense right here. You see the 5 minute has two. So I would honestly enter off a close below the 5 minute, which it actually looks like we did right there. We closed below it. So let's actually take a sell here. And my stop loss would be a close above. Let me actually see if either that or
And I guess
25.
if you want to get if you want to get a better entry, sorry to interrupt you all these times, but if you want to get a better entry, I say you would go with the one with the the one most in the premium market. Because if you see,
Oh,
you
this
would
one up
still
here?
got you would have still got your entry and everything. It would have been better, yeah.
Yeah, that would have been a
But I
better
guess it would
fill,
have been
huh?
the same because it didn't really close, yeah.
Yeah, it's
Like,
kind
I
of
guess the same.
discretionary. That's why I like when there's only one, because it forces you to only choose one. But like when there's two, it's kind of like up to the trader, like, okay, which one do you want to go off of? You know what I mean?
Yeah.
So let's see how this plays out. God damn, what the? All right,
Damn,
well,
bro.
I probably would have taken TP there if I'm gonna be honest. But let's see how far this.
Yeah,
Jesus. All right.
fucking hell.
Yeah. So there you go, boys. I mean, you would have probably taken TP by then. Obviously, you're not gonna let it
Yeah.
run all the way back, but yeah, that's the model right there, boys. Standard deviations. Yeah, because that was PM session. What time was that at? At 3, right at 3 reversal. But yeah, I'm
I
gonna
think I
flat.
actually caught some of it, but yeah,
Is that
that's
Dave's
crazy.
quarterly theory you're using?
This one down here, yeah.
Yeah. Okay.
Let me turn off historical cycles. But yeah, I'm gonna flat it here for a $30 loss. But you guys saw how far I went.
Yeah.
$100 in profit, baby.
Yes, sir. I
Yeah,
mean,
I
yeah,
actually
that's what it
I didn't
is.
know it was that simple, so I'll definitely be implementing that to my trading strategy because when it usually reverses, I just watch it and wait for it to retest a fair value gap, which, you know, if it's gonna dump, it's not gonna do it. So if it doesn't do that, I guess I'll look for that. So a breaker block would be
Exactly.
considered.
Exactly.
Yeah.
So yeah, so essentially like let's even right here on the 5 minute, you can see this one right here. You see how we have this liquidity sweep here?
Yeah.
All right. So breaker block traders see this, right? They see this order block or this breaker block right here and they're like, "Okay, I'm going to enter off of a retracement," which I mean, it's valid. Look, right here like traces back into it. And it's
Yeah.
respected. But me, I see a breaker block in anticipation with the liquidity sweep, and on the liquidity sweep, okay, do we have an SIBI? Do we close above it? Yes, we do. We actually close above it right there. You know, stop loss, whatever your risk management wants to be. Like mine is usually 25 on one contract. Yours is maybe like 10. So let's say, did it hit 10?
Yeah. I think
Oh, it was.
yeah.
God damn, that shit was close.
Woo!
One tick.
Talk
All
about
right,
shitting your pants right there.
dude. I would have been like coming. So you could have
Sweat.
Yeah, so there you go. Target yeah, you could target whatever. I mean, whatever you
So
want to
wait,
target.
let me
but-
show my screen real quick. Yeah, I actually want to.
uh,
I just want to know if I'm getting this right. Okay.
yeah, yeah,
I
yeah.
already marked out the zones, right? So let's say, so if there is a liquidity sweep, or not even liquidity sweep, I guess, could you just, yeah, right here.
Spencer, your stream's not working.
So you'd go for the body,
Yeah, yo,
and
Spencer.
then
Wait up, wait
I
up. It's
see.
loading. It's loading.
Your
It's loading. It's
stream's
buffering.
Oh, it's buffering. Oh shit.
Yeah, yeah. It's like the little like loading squares, whatever it is.
Yeah. You can see it,
Yeah, I
right?
can see it.
Oh yeah, yeah. No, you're chilling now.
All right. So let's say if we went off this, I guess let's go off this body right here. So if we were to do that, okay, and we have this, would you go off of this right here? This one?
No, because the rule for me is the liquidity sweep leg. Did that leg sweep liquidity?
Uh,
No, right? It didn't sweep the previous high.
I mean this one did, but I mean no, it didn't really sweep a previous high. No,
No, right?
it
So
just swept,
then,
I guess, a high, but I mean, yeah.
so then that wouldn't be the model.
Okay, so then if you
Yeah.
were to,
Now go
so
to
you
the
only go
low.
off your previous day and then your daily high?
No, no, no. There's more to it. I use 1 hour, 4 hour imbalances, 15-minute imbalances while I'm trading. But I'm talking about. I mean, we were talking about like how to frame your pre-market.
Yeah,
But
I think I picked up on the phone.
I mainly target like standard deviations and low-hanging fruits when I'm like taking the trade.
Okay, so wait,
You
let's
can
just say
f-
you took this one, okay? I know
Alright.
this is like PM session. There's not much volume, but would you? You know what? Actually, that's not even a good trade because there's no clear setups. I guess you have to do it on like. Let's go back here. Let's just go back like a week or something. Okay.
All right, let's do it.
So I'm just gonna make. It's hard to find one because, it's probably easier to find it in the timing of it, but, yeah, there's like no sweeps happening for some reason.
You're on the 15-minute. Just go on the stay on the 5.
5 minute. All right.
Yeah. Just look for any liquidity sweep, any like significant liquidity sweep. Obviously during our model time frame, so like
Yeah.
9:50 to 11:30.
Do you go off the wick or the body of them?
On what? On the liquidity sweep?
Like, yeah, you have the body or the.
The wick, the wick is manipulation. So think of the candle as the wick being manipulation and the close being the. All right, bro. Someone mute T-Dub.
Damn, my fault.
Oh, my bad, bro. Yeah, no, you're good. You're good. I didn't want to like press you. It was just in my ear. Yeah, so like the wick. Think of the wick as like manipulation, right? So the candle close will be essentially in the power of 3. It's going to be the distribution, right?
Yeah.
So yeah, I do use the wick. Now, if you use the low, you see that low there at the low of day today? Just
Yeah.
use that for example, right?
Okay.
Use that low for example. And I didn't even trade. I haven't even looked at the chart at the low of day today. But I bet you on a lower time frame, there's a setup right there.
Let's
If you-
check it out. Let's go to the
let's
3
see.
minute first.
Yeah. So go to the 3 minute. There's no fair value
There's-
gap.
You know, and then I guess the 1 minute. There's, I guess there.
Yeah. So use the last leg that swept liquidity. The last one.
So I'm trying to fucking find one.
Right there. Right
This
there.
small one right here.
Yep. Right there.
Okay. I mean,
That's it right there. That's the sauce. See how price respects it when it retraces back into it?
Yeah.
Yep. So,
A
I
bit.
mean, like, this is the tough part. Like, you see how if you would have entered on the close above, you would kind of be like, I mean, I don't want to say
Yeah,
like,
you enter like right here. Yeah.
yeah, if you would have entered on the close above, you would have, I mean, dude, look, 20 points on one contract. That's, what is that, like 500?
Something.
That's close to 600, I think.